Welcome to Admiral Markets. Thanks for joining us today. We're going to take a look at reversal trading and reversal setups, potential setups in the Forex market. We're going to take a look at technical analysis and charts. That is always our primary focus and concern when looking at the potential setups. However, with that said, before we actually look at what's going on today, we will go through this PowerPoint explaining that this material is intended for a global audience. Please take into account that this may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risk involved in trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more info on that. And this webinar is for informational and educational purposes only. What I am showing you is just my opinion at the moment. Doesn't mean that I would necessarily trade it at that point in time, depending, of course, on how things develop. So it's only my opinion, and therefore it's only for educational purposes. But I will share with you my opinion of what's going on right now, and this is meant as educational intent. So by continuing watching this webinar, you agree with that disclaimer here and the content mentioned in front of you in this PowerPoint. Thank you for your attention. Reversal trading, it's a bit different than usual. Normally we look at trend trading. I can see maybe less popular. Seems to be a bit less people than usual. Reversal trading is certainly difficult. It's not an easy subject, and it definitely requires a lot of patience not to enter a trade too early, not to anticipate a reversal too early and wait for indeed more signals or more confirmations, for instance, regarding price action, candlestick patterns, breaks, etc., bounces. It's not an easy thing, but in any case, we do need to define the trend prior to trading reversals because we need to know that there is a trend. You can only trade a reversal if there's a trend going on, or at least some impulse, because then we're trading it to the opposite side. That's why it's more risky, because we're anticipating a turn, but we could be very wrong in that anticipation. We could be anticipating a turn at point X, but price continues with the trend and only turns way later. And sometimes you will see that traders are then trying to catch a reversal, try to attempt that a couple of times, then give up, and that's of course exactly the time that the reversal does happen. But in the meantime, I take a couple of hits already in the meantime. So that is one of the disadvantages here with reversals. So you need to be more experienced, have more trading under your belt to be able to capitalize on those with success. Searching for the opportunity in a reversal could be an exhaustion wick, for instance. Filters could be if there's not a clear support and resistance close by, if there's not the lack of a strong support or resistance. Obviously, a reversal has a higher chance of reversing from an area if there's a strong support and resistance zone that price could be using to bounce off from or to reverse at. Then we have the trigger. That could be, for instance, the break. The opportunity could be a massive wick, for instance. On the 4-hour chart, the trigger could be, for instance, if we break the candle low of that 4-hour candle, and the entry could be the hook back of the swing high, swing low on a 50-minute chart at the 50 fib, for instance. Right? You can play around with these configurations. That's the beauty of this module and these steps, is that you have a clear checklist, and it's very flexible in creating an approach before entry and checking if everything is in suit. For our analysis, usually fibs, trend lines, and moving averages. And also often nowadays we're using more and more the Camarilla. Take a look at Admiral Markets in the social media. With that said, let's take a look if we have any news events here. We have Chinese PMI, German PMI, we already had that, sorry, German PMI coming up in 38, French PMI coming up in 8, pound MPC meeting minutes That's a high impact for the pound. Therefore, pound, we're going to be careful with that currency, or at least I am. We got CAD and USD at the end, and New Zealand interest rate, 14 hours from now. So that is something to be aware of. Why? Because the interest rate could be high volatility. Forecast is 3%. If it does, that could mean, if it does increase to 3% from 2.75, that could mean New Zealand strength across the board. We'll find out soon enough. Euro dollar pushing up. We talked about yesterday about the fact that we could have upside, but yesterday we didn't break the high of the day before. Today we are breaking above yesterday's high. What does that mean? Intraday resistance is out of the way. What does that mean? Little chance for trend reversals. This is actually looking more like a trend breakout continuation, I would say. Unless we get a massive wick here, personally, in any case, actually, I'm not too interested in downside or upside. You know, it really depends what time frame you use. If you see this as an uptrend or downtrend, you could really see it both ways, funny enough. Some of you might see, I don't have my drawing tool, one second. All right. Some of you might see this and say, hey, that's up momentum, this is slow down, and you would be right. I agree with you. I see the same. Some of you say, you know, I'm actually using the 1 hour as a trend, and this is moving down, so for me, the trend is down, and that also makes sense. So it all depends what time frame you use for your trend definition. However, if you look at the daily, the weekly, the 4 hour, price is moving up. Although slow, more up than down, certainly. The only trend that could be seen as more or less down is hourly. But one thing with the hourly that doesn't speak in its favor is that we had a double bottom, that we broke out of this resistance already. So in my opinion, looking at the evidence, if you just weigh the evidence, weekly, up, daily, up, 4 hour, up, hourly was down, but we had double bottom, and now we're breaking out of resistance. Breakout potential. 15-minute up. So what is the trend? Up, in my opinion. Yeah, it's true. Let's see. Also, indeed, good point, Daniel. We did break out of resistance, which not only was it the double bottom, but one could even say a falling wedge, what Daniel was saying. That makes sense. It's quite a flat line. That's why I was more thinking of a double bottom. But, you know, it really doesn't matter. It's both are the same intention. Both have the same meaning, basically upside. So that's not really that important. Good job done seeing that pattern, Daniel. And we're having a candle outside of that resistance right now. It'll be interesting to see how this candle closes 5 minutes from now. Personally, if you look at the 15, I would be interested in hookbacks to the H3, for instance. Even this could be a bouncing spot as is. Maybe I already entered. Let me see. I had it pending at 25. Yeah, probably already entered at 25. If it goes lower, I might add a position at 15. I'll use the entire swing high, swing low as the bottom for the stop loss, but that's a bit bigger position trade. If you're looking more for an intraday trade, then that would be a bit big. Stop loss would be a bit too big. What stop loss would be good for intraday trading? Let's take a look at this hourly. Let's see. Excuse me. Let's see. Our intraday trading. 1 second. Got distracted. I had to sneeze. I would say this 30-minute. This is a support level right in here. From an intraday perspective, wouldn't expect it to go lower than 138. 138.10, I would say. If it goes lower than that, 138.10 is a bit tight, but 137.97 is a bit more spacious, to be honest. It's moving down pretty fast. I'm not sure what's happening with maybe some news. Let's take a look. No, nothing. 2 minutes from now, so that's not it. Maybe just a retracement. In any case, we're looking at reversal trades. I would not be interested in a reversal trade on the euro dollar. Well, it depends how you look at it. I would be interested in a reversal back up here, but that's not really a reversal trade. It's more a continuation trade. Just joking. Now, reversal trade, I mean, if it would really have a 4-hour pin bar like this, maybe, but I don't think it's really in a fantastic situation. It could be a false breakout if there's a big 4-hour pin bar. That's true. That's always something to realize. However, from a reversal point of view, it would definitely be better if the euro dollar is up at around 139.70, 140. That's when better reversal potential, I think, is present. 143 would be fantastic for a reversal trade because that's a 78.6 fib. So I know that's far away from now, but that's something I would like as a reversal trade because that's a clear level of resistance right here. This 78.6 fib of this weekly swing high, swing low. That is the best reversal trade in my opinion to the downside. For some of you that might not be interesting at all because that's way too far. But something to keep in mind when price gets there, or if price gets there, something that might be interesting for you if you like. Other than that, before we get there, maybe at the 139.60 reversal trade is a potential as well, which is the minus 272 target of this 50% bounce. So to me, for the moment, it's looking more like a trend continuation than a reversal setup on the euro dollar. Very simple. I think we can move on to a new pair. But as last comment, a clear impulse, a clear swing high, swing low with momentum, and a retracement to the 50 fib, and now seemingly a bounce, plus a break of yesterday's high. So to me, it is looking like intraday upside. Today's initial low was 138. So stop loss below 138 is a pretty decent level, I would say. Why? Because this is today's initial low. Now, initial low only means, of course, that at the moment it hasn't been broken. Doesn't mean it will be necessarily today's low. Not always. But considering the upside momentum, considering the fact that we broke yesterday's high, there is a strong chance today will not dip below 138. So therefore, if anything, it's a decent level. Although I would still wait at the moment because it seems to be pretty volatile as we speak due to maybe this news event that has been released. Looking at this daily candle, it's flying up and down. So maybe hang in there for the moment before entering because this is really moving down fast. So I would probably wait for this momentum to die out a bit because this is gapped even down here a bit, moving pretty fast. So I would wait. Yeah, I would wait for the moment. To me, this upside momentum is technical. This downside looks more like a news event spike. So now this news event spike could be, could have its impact. So I would let this storm right out, wait for a clear bottom here in play, something like some candles here that clearly are not breaking the bottom anymore, and then we should be safe for the upside continuation of the technical continuation, right? Technically, this is a hook back, but because the hook back is has so much momentum in it, if you're not in it, just wait, I would say. Wait for some consolidation, and if it then doesn't break the bottom, use the time factor rule. As we know, 5 to 6 5-minute candles, for instance. If it doesn't break the bottom in those half hour, then more downside is not likely, and uptrend continuation is likely. All right, because this is moving up. There are a lot of reasons to see this as up. Once again, it's not about opinion, it's about measuring various time frames and elements and making a story for ourselves. What is the story saying? This is what the story is saying. It's not an opinion, it's a fact. And placing those facts together helps us with analyzing where we want to trade it, if you want to trade it with the trend, and where you want to trade it if you want to trade a reversal. That's all. We're roadmap readers, nothing more, nothing less. News event spikes like this will always happen sometimes. So it's good to, if you're not in it, to wait. As I said, wait for those candles here, wait for clear bounce, and either take the bounce or the break of some consolidation here to the upside. And then we're getting the continuation of the technical analysis. If not, then maybe this will go lower than I'm thinking now at the moment. There is a lot of momentum, so there's always that danger in play. The moving averages are for the moment up, or were up. So everything was technically set up for upside, but you never know with the news. They could change the environment, they could change the sentiment, and that's why we need to be a bit careful. PMI was a lot lower, and I would rather now wait for the bounce than anticipating any turn here. That's risky. Let's move over to the pound. Pound is moving down as well. Pound is something that I certainly didn't trust anyhow, as those that joined our trading room yesterday know. And why was that? Because there's tons of divergence on the pound dollar. Not only on the hourly, but the 4-hour chart, the daily oscillators are oversold. I don't have those on the charts because it would be too crowded, but there's some, let me say, special trend measurement indicators that are showing pretty high oversold levels. So there is definitely a risk here on the pound dollar. That's why I definitely didn't trust this upside at all. And in my wave count today, I also have this as an ABC correction. And we are not able to break this top. We had divergence between the 4-hour tops here. Therefore, not interesting in my opinion. It is moving down. That doesn't surprise me too much. Let's take a look at the 15-minute chart. Sorry about that. I had to sneeze again. So the pound dollar didn't look bullish. That is, if anything, had a reversal potential because of the divergence indeed. So that would have been a good example where it not already have moved down, but still there's still potential to join a reversal. There's a double top here potentially, plus the divergence between these tops makes it potential reversal territory, or at least retracement territory. Now the target of that retracement could be this bottom here, or if it really gets to, in a trending mode, it could start flying down lower to these fib targets. Now regarding fibs, Daniel has a question. What time frames do I like to draw my fibs? And while I really draw them on any time frame. Depends on what time frame I'm looking at that point in time. In any case, most of the time I'm looking at 1 hour, 4 hour charts. So probably those would be the time frame I use them the most for. But even on the daily, it's really interesting sometimes to see where the bigger fib levels can be sometimes. So it's really no favorites or limitations. This is basically practically what I'm using for time frames most of the cases at that point in time. Now, lower than an hour, I don't use them too often. Less often than hourly and 4 hour. That could be said though, I think, on average. Let's see, AO, I guess the daily chart fibs are more like filters. and are like bouncing spots. Not that I would trade them. The hourly 4-hour are tradable and sometimes either tradable or like entry potentials, like triggers, whereas daily they're more like filters. And the 15, they're if anything, they're entries, not filters or triggers. Let's see, AO divergence, yes, indeed. AO divergence between these tops. So we got engulfing 4-hour twins here. We already had a big wick, or not big, but at least some wick here. Plus we have 1, 2, 3, 4 hours going sideways, not breaking that top. That means the up impulse is over at the moment. And after 1, 2, 3, 4, fifth candle, not breaking that high, this up steam here that we still had up here, and we had some slow downside, that seemingly now finished. Now we can wait for this 4-hour engulfing candle to finish. Of course, taking reversal trades is always more dangerous, but an engulfing 4-hour twin like that could merit a potential reversal trade idea, at least from an intraday perspective. Let's see, if we get back to the moving averages, maybe we got this moving averages falling down. So let's take a look at the 5-minute chart. If this gets back to the zero line, and the AO gets back to the zero line on the 5-minute chart, hits the moving averages, then starts to show resistance, it could be an intraday short for trading to the downside with momentum. All right, the momentum is down on the pound dollar, so that would be the idea upon a bear flag like that to trade it with the flow of today, which would be a reversal trade on the hourly, 4-hour, daily, weekly chart. All those trends, all those time frames are up, but doesn't mean that today will be up. Today, considering the fact that there could be a potential reversal or retracement on the higher time frames, could be a down day. Therefore, trading today down would be most likely trading with the flow. But once again, it would be good to get a confirmation via retracement, some bear flag, and a bounce / break to the downside. Now, euro is looking up to me. Pound is looking down. So is there some bounce potential on the euro pound? That's what that would mean. It would have to be that. Otherwise, something's not adding up. Well, we are in a downtrend actually on the euro pound. One thing is true though, that we had maybe this falling wedge, and we broke out of that falling wedge. So difficult to say. We do have divergence between these bottoms, double divergence on the hourly in fact. We also have divergence on the 4-hour chart as well. So double divergence on the hourly, single divergence on the 4-hour chart. Well, that is potential for euro pound indeed to retrace up. So in that regard, although there is a downtrend, there are reversal signals on the euro pound, and therefore the bullish structure on the euro and the bearish structure on the pound does seem to get some confirmation here from the euro pound. However, it's a reversal on the euro pound, so that's always more risky. You can see the 4-hour we have a wick. We'll have to see how this handles itself. For the moment, we do have upside. This seems to be retracement. This seems to be a break, retracement. I would still expect this to happen, but if you want to trade a reversal on the euro pound, then that could be a good position right here. I'm not a big fan of the euro pound, so I'm not going to trade it. This is the 50-minute chart, and we're hooking back to the H3 short here. I don't know. I'm not trading the euro pound myself. Could be a bouncing spot, maybe. I don't know. I would rather wait for a bit of confirmation because this seems to be moving down pretty fast too, just like the euro dollar. So I would rather sit on my hands a bit and wait for more confirmation, wait for price to settle a bit, make some consolidation, wait for the break to the upside. Daniel mentioned something on the pound dollar. Let's see. Yes, we got some interesting candlestick patterns. Daniel's mentioning a dragonfly candle resistance. Got a big pin bar here, a shooting star, and this is the 4-hour world. where we have a doji, here a doji. Daniel mentioned it on the daily chart. We have a lot of wicks here. 1, 2. Yesterday was actually a bullish day, but could be a retracement of that candlestick pattern here with a big wick. So definitely, this daily candle is certainly a big one. So I would say still relatively at resistance. Mind you that this resistance spot on the weekly, I would say, is relatively, prices, I mean, hardly was able to break above it. Probably about 15 pips, mere 15 pips, which is not too much. Euro dollar back to the pivot. Seemingly getting a bounce off that 138 level at 138.05. Let's see if this will be the bounce. Alrighty. Let's move over and take a look at the AUD/USD. AUD/USD is falling again. That is a bit surprising to me because, if anything, this was looking like a bull flag to me. So therefore, I was bullish, although only against the dollar, not against the euro or pound. The euro AUD and pound AUD, I saw reversal potential. The AUD/USD looked better, so that could have been explained by the fact that euro dollar is an uptrend. So that was fine by my opinion. The only Aussie that I found interesting was the Aussie Swiss franc and the AUD/USD. The rest, like the AUD yen, the pound AUD, euro AUD, and AUD CAD, were not interesting to me. But there was actually indeed a news event on the Aussie, as Daniel said. That's totally true. This news event, sending it a lot lower. This was a news event spike, big one, and there's nothing you can do sometimes with that. If you're in a trade like that, then if you're in a swing trade like that, then there's really nothing that one can do. You're just vulnerable to sometimes short-term spikes, short-term movements, and that's the disadvantage of trading longer-term or swing trades or intra-week trades. And the advantage of trading more shorter time frames is that you are more lighter on your feet in a way and more adaptable to what's happening right here, right now. That's the advantage of trading lower time frames. With that said, the news event setting it down, definitely looking totally different now, though. Totally different. I'm not sure which gap are you talking about, Daniel? You mean the gap between these moving averages? Maybe Daniel's talking about the gap here between this moving average and this moving average. Is that so? Let's see if Daniel is indeed intended meaning this gap. Ah, you mean from the news. Yeah, yeah, I'm not really a gap trader, to be honest. So I don't have any specific extra knowledge on how often this occurs and how many times it would be respected. So, but in my experience, something like this doesn't have to get retraced right away. There could be more downside potential left. You never know. Actually, we could maybe get some retracement and still continuation. This particular filling of the gap, the retracement of the candle basically is what Daniel means, could be done way, way longer, because long term, I think there's still potential to go up to 95.20. Then it will easily get filled when we move up there. So it doesn't have to be right here, right now. We could see first downside and then upside, at least in my opinion. But as I said, I'm not really a trader that looks at that particular news events or big spikes so much. Usually, though, in general, you're right that most candles get retraced. Most swing highs, swing lows get retraced before currency moves. to the next zone. You're right on that. That's true. But not always, I guess. You see, this is a very big candle, so that's a lot of momentum. You could see some follow through on that. However, it's difficult to trade to the downside. We already reached S3 today. We basically went from H3 all the way down to S3, blasted by the L4, L5, L3, just one candle straight through it. That is definitely a news event spike. No doubt about it. That was just a blast down. Now, it's difficult to imagine more downside in today's trading, but it can happen. Just because the S3 has been reached doesn't mean it has to be the end. It could still push. But at the moment, I'm not interested in trading it to the downside, and I'm not trading it to the interested in the upside because there's no confirmation of this having any end at the moment. We're just actually about to make a new low, most likely. So both sides, not interesting. The flow is down, but there's no space down anymore. Unless you're in the trade already, then you can just hang in and trail stop this. Because you never know. It could still push another 20, 30 pips. But those pips are not worth the risk if you look at the 15. If you look at the hourly, price is retracing down back to the long-term moving average. 4-hour price is at the intermediate. It could have potential space all the way down to the long-term moving average. If we use fibs on this 4-hour chart, we can see there are plenty of targets to the downside. So this, with that news event, today's bearish candle, very, very bearish. The only thing that we can do, therefore, maybe wait for, I don't know, some kind of retracement. Not even that. I don't know. It doesn't seem to be that interesting to me because it already made its massive move. All that it could do maybe is some consolidation throughout the day. Doesn't seem to be that interesting to me. This is a Camarilla pivot point indicator. If you want that indicator, I can send it to you. And please just send me an email. I will write down my email address. Okay? And if you send me an email, please send the Camarilla. Then you'll get that soon. Yep, no problem. Anyone that's valid for not only Daniel, but certainly for anyone here today present. It's present today, sorry. Okay, so Kiwi, totally different, right? Kiwi didn't move down as much. Kiwi is at the L3, right below the pivot. Totally different story. No trend in play though, at the moment. Price is right at the moving averages. Do you see that? There's a whole mixture of moving averages. Sideways, price is bouncing back and forth, above it and below it. No trend. Your dollar is still pushing lower. A lot of momentum on the dollar at the moment. I guess this hourly wick may be something that we said to keep an eye on. Just in case this is a false breakout. Looks like it is a false breakout. We were looking at the wicks on top. Forgot to look at the top of the hour though. But we said it prior to the top of the hour that we have to keep an eye on that. And this is looking like some kind of wick, at least some kind of potential wick that, yeah, that was a signal that we said to keep an eye on. The 4-hour too, let's take a look. The 4-hour didn't close as yet though. 4-hour pretty reversally. But this is pretty, let's see, 8 o'clock. I think that still takes some time before this candle's closed. So that a lot can happen in that time. Let me take a look. I think 1.5 hours before that the 4-hour candle closes. But at this rate, when you look at the 4-hour, there's no doubt about the fact that this is looking like a false break. We talked about that option, although I didn't think it was likely. However, it seems to be more and more likely as we move forward. Looking at this 4-hour. Thanks, Daniel. So indeed, 1 hour 38 to go prior to this 4-hour close. So there's still some time left. But if it were to close like this, that's obviously a false breakout, no doubt about it. That's one of the disadvantages of taking a pullback like I did without waiting for a bounce. But I took a smaller position, anticipating that I would add another position, scale in as I get more confirmation. That's one of the advantages of waiting for confirmation instead of trading something as an anticipation. The first trade I had was anticipation of a bounce, right? I saw a break. I was anticipating the pullback and go. Well, we did get the pullback, but the pullback just fell. So that's one of the disadvantages of not waiting for some confirmation. So it's always good maybe to, if not to wait for confirmation, maybe at least to split the risk so that not everything is put on an anticipating trade. Anyhow, the moving averages here are pretty flat, so that's not too interesting. Let's take a look at something else. Maybe there's some currency that is having better moving averages on the hourly. Let's take a look at the hourly and see if anything is trending. Dollar CAD is moving up. We got price above the moving averages, so there's nothing wrong with that. Let's take a look at the 5-minute chart. And well, we got clear break up here at the moment. Struggling though at the H3 again. Let me take a look where yesterday's high was. This is intraday. We're pretty close to yesterday's high, and we're too close to the resistance on this dollar CAD. Yes, we do have the moving averages up. This is an uptrend on the dollar CAD at the moment because of that. But we are too close to some resistance level that would be worrying for this dollar CAD from an intraday perspective. If we're looking for some smaller trade within today, some scalping trade to catch some pips to the upside within the next few hours, dollar CAD could be interesting, but it's just that we are too close to this resistance. Dollar Swiss is moving to the upside. It has, if it closes, what I'm looking for is at least a close above the moving averages. Then it would be an uptrend. But we need this hour to close. It's not ready as yet. Dollar yen is in the moving averages. Pound yen is in the moving averages. What I mean with in is that its price is below and above certain moving averages. What we're preferably looking for is price to be above the short term, then the intermediate, then the long term. Everything is aligned. The other way around would be price, moving average, moving average, moving average. That's what we're looking for up and down trend. When price is in the middle, in the moving averages, basically, then price, moving averages, and price is in between them. That's not really a trending mode. That's a reversal mode. Actually, we are looking for reversal trades. Sorry for that. I'm so used to looking for with the trend trades that I forgot today's topic is actually reversal trades. That's funny. In that regard, the yens are actually a candidate from that perspective. Okay, pound yen especially got good spaces. Prices moving back to the moving averages. There's a good angle of the moving averages. Good space between them. Dollar yen is at resistance too. Pound is moving down. Pound yen was Therefore, a pretty good candidate upon the break of this pivot here and the L3. And you hook back, like the pound dollar, could be a good shorting territory for more downside to the L5 target. So that's definitely something that could be a reversal trade idea today. The euro yen is less interesting in my opinion. Despite the fact that both are showing bearish price action, you got a wick here plus a bearish candle, you got a wick here and a bearish candle. The difference is in the space between the moving averages. Look, there's not much of a trend on the euro yen to the upside. Why? Because the space between the moving averages is small. Whereas the pound yen has a lot more space. So I like that one a bit more, the pound yen. Hope that's clear to everyone. If you have any follow-up questions, let me know. Actually, I see a question from Daniel on the euro dollar. Let's take a look. Is there a potential for a flatline breakout on the euro dollar on the hourly? There's a downward outer trend line and a flat line of resistance. Yeah, there was, let's see, yeah, we actually broke above all these intraday resistance levels, funny enough. But yeah, that's usually what happens actually with false breakouts, obviously. They are false because they don't get followed through. But we didn't get followed through here. And, well, one thing that is always good to keep in attention, that's something that didn't mention before, but in retrospect is always good to keep an eye on, by the way. And just because I didn't mention it today doesn't mean it's not good. I just forgot about it, is that if you look at the moving averages, in that regard, maybe the upside potential was a bit too early for me to be excited about that because of the moving averages that were pretty flat. If you have any doubts, that's always a good thing to look at. But sorry, let's see. Daniel's actually talking about the 4-hour chart. Not sure. There is some resistance here indeed. There was some intraday push through it, but with the wick here, it's looking more like a false one indeed. The flat line. There is that support at the 50 fib, but with the false breakout here, most likely, yeah, it's a question. We could even get a bounce again though at this line. A triple bottom at the 50 fib could happen. If you're looking for downside, then the L4 down to L5 is a very small space, but that would probably be what we're looking at for downside. Right here, right now, it seems to me risky to trade it to the downside because we are close to support despite the downside momentum. Yen obviously also falling a lot. That's primarily the Aussie. Pound odd and euro odd are also flying up. That's also a news event, which is a bit skewing the potential for us to trade anything at the moment because of that. But yeah, we did retrace, quite a lot. There could be some follow-through trades on the pound odd, euro odd when looking at this 5-minute chart. However, we just have to realize that we are way, a lot of movement for an intraday time frame. And certainly there could be some continuation when we break this resistance level, for instance. For instance, this pound odd or the euro odd here on the 5-minute chart. But we just have to note that this is a gigantic move up for today, so how much is already left? It doesn't make me too interested when looking at such movement already. Doesn't mean there couldn't be a few pips left, but I'm not too excited about trading that at the moment. The Aussie has just really, because of the news event spike, really moved a lot, tremendously, and therefore less interesting. Not to say that it could continue though a bit more. But in general, though, with that spike up, we are getting follow through on the euro odd and pound odd reversal. And that's something we discussed last week too, is that the 23.6 fib of this last daily down move is on the low side, right? We said on the low side. We have the potential to go up to the 38.2 or 50 fib. We won't go there, though, in one straight shot. And here we see the euro odd. Again, sorry, just to lead to the accident. We won't go up there in one straight shot. No, we're going to have ups and downs. We actually had a double bottom. We had to move up. This was a hook back from our upside. And therefore, a move up to the 61.8 fib, 38.2 to 50. Those are all targets to the upside. That's something that we already discussed last week, that could happen with this euro odd and pound odd, that we retrace higher because we're already rounding and we're making kind of like a inverse head and shoulders here. With higher resistances. So interesting, however, would rather see a bit of a pullback before taking that continuation to the upside. So this is definitely not surprising. The Aussie potential here for a bigger retracement to the upside. The yen, yes, it could be a reversal potential indeed. When looking at the pound yen, I like it a bit more because there's a bit more space. The dollar yen is moving a bit slow. It is in a channel like this, something like that. So it's about to break support. We had a resistance line like that, roughly speaking, as well, plus this resistance line like that. 50 fib, strong downside, strong fall, fast fall, slow upside, corrective upside. A break of that support line could mean the downside continuation. Looking at the 4-hour chart, lots of struggles. So that could be a reversal trade indeed. On the bigger picture, a downside trade here would, target for the moment would target these support levels here around 101.40. However, if we break this support line, Magenta line, there could be a bigger reversal trade going on in the dollar yen. In fact, there could be some downside potential down to the 61.8 fib. Remember that this was an upside that lasted very nicely, but the retracement is taking very long. We could see more continuation of that retracement, something like this, and then down to the 61.8. That could happen if we break the Magenta support line, now made blue by myself. Until we break that blue, I know for some maybe that's already still too far a scenario to be interested in. So before we break that blue, we have the potential down to that support level. From an intraday perspective, what we see is this L3 long. We're especially interested here below on the dollar yen. Below this moving average, below the fib, below the L4 for downside continuation. Between this line and this line. If the dollar yen moves down, the pound yen will probably get some follow through as well, obviously. That could be an interesting one. Your dollar is bouncing. It didn't break the 138 level that I said. So the today's initial low still proving to be strong enough to at least act as support, which is good, at least something. We are getting a pretty strong bounce. This could be a false breakout. It sometimes happens. At the moment, though, I would put these kind of analysis on the side and just wait for a bit more confirmation of what is happening, because it's a bit of a wild ride at the moment. So I'll just let the dust settle, wait for some consolidation, wait for some triangle, and wait for the break of that triangle to the upside is probably the primary interest at the moment. All right. Let's review the other ones quickly at the 1 hour chart, see if there's a good angle on the moving averages. And when I finish that, then let's take a look at the Camarilla a bit more closely, and I'll explain what all these levels mean. The pound New Zealand, let's see, is choppy at best. Not that interesting. How about the Euro New Zealand? No, that doesn't look like a good trend either. EuroCAD. Also moving up, down a lot. Let's take a look at the 5-minute chart. Well, same like the euro dollar, it seems to have that upside momentum, but a lot of downside reaction so far. So that doesn't seem too interesting to me at the moment. Pound CAD, let's put a new template on here. 1 second. Price is not above the moving averages. There is a trend though. Angle of the moving averages are all aligned. The angle is up. So we're getting close to the hourly price being above those moving averages. That's what I would like to see. This could be a pin bar. The pound CAD may be interesting, although we have a news event in 50 minutes, so you have to be careful of that. Aussie CAD moving down a lot. What else? Aussie New Zealand moving down a lot. In fact, when we talked about the Aussie New Zealand, I think we talked about it, hitting the 886 fib, that potentially being resistance. That it would move down that fast is interesting. Was maybe I didn't expect that much of a momentum, but it is certainly breaking quickly. What else? Well, if we look at the moving averages, nothing really seems to be trending. All of it is flat. Maybe the pound Swiss here. Let's take a look at that. That could be interesting, pound Swiss. The price is not above the moving averages. Actually, it's below it. We would need price to be above it again, preferably, so we know the momentum is back in play. The Swiss franc seems to be quite choppy at the moment, so that doesn't seem to be any trade. Now, at the moment, if I look at the 1 hour chart and the moving averages, I don't see much, unfortunately. Just because the Aussie has moved so much, the Swiss is choppy. The CAD is weakening, but we're bumping into intraday resistance because of the daily high. Let's see. We had a lot of Aussie weakness, which is difficult to capitalize on. New Zealand has an interest rate day decision today. That also makes it a bit unpleasant. Yeah, there are a lot of things that don't line up at the moment. What can you do? at least depending on how you look at it. If you're looking for if you're looking for a trending trade, if you're looking for reversal trades, then we already mentioned a couple of ideas, like the pound-dollar downside, pound-yen downside, dollar-yen downside, for instance, could be things to look at. Let's see, Daniel, let me go to the pound-yen here. Yeah, good. Basically what it means is that there are two types of pivots, let's say. One is the classical pivot points, which says pivot S1, S2, S3. You can see on the pound yen it has a tremendous space between these S's. Those are the classical pivot point lines, R1, R2, R3. The L3, L4, L5, and the H3, H4, and H5 are the Camarilla basically. And what it means is that if you have an L3 and H3 are basically the classical range levels for any intraday trading. Those are the levels the key players could be using, or some of them are at least, for intraday movements. All right, so if it breaks that, that means we could be breaking out of a certain daily range. However, we can only be, let's say, have a more higher chance of a trending day when we break above H4 or below L4. That's why when we see H3 it says short, L3 long, because that's potential bouncing spots. A breakout occurs when we're above H4 and below L4, and the target of those would be H5 and L5. So L3 and H3 are kind of like resistance and support. L3 is support, H3 is resistance. H4 is not necessarily, it's maybe a bit of resistance, but it's more also intended to indicate kind of like an acceleration up to H5 potential, a breakout scenario. Now, I don't trade these levels without any confirmation. It's not that personally. I think Nenet, or Tarantula as his nickname, uses the indicator more as a standalone, I think, or less tools with it. I more tend to use, I think, a bit more tools with it than only this. For me, it's like a confirmation. Wouldn't trade, just because price is at the L3, wouldn't trade it to the upside there. Not that it couldn't work necessarily, but I would want more confirmation. I think that, for instance, some confluence from other factors, other tools I use is needed before trading that. For instance, if I'm looking for an H4 breakout, what I would like to see is price move above it. Let me show. I would like to see price, for instance, move above it, make some consolidation, and break again. And then I know there's a decent chance up to H5. So it's indicating range levels and breakout levels potentially. The L3, when it is support but breaks as support, then it can of course also become resistance then, potentially. But that's just a general Forex concept. Broken support sometimes becomes resistance, not specific to Camarilla basically. So they're based on previous day's price action, I would say, just like, well, that's for sure what the pivots are, of course, based on. So that's why you would indeed see that they're used for intraday, because they would give kind of this potential space, what we could imagine for today's price potential movement. So you would see indeed that happening regarding the clustering. Yeah, they the best is to use them on. Well, I mean, you could use them even on hourly charts. It's just that I get a bit distracted with too much info. I like to use it on 15, 30, or 5. 1 hour could still make sense, but it's just a bit too, I think, a bit too busy to show you. Yep, no problem, Daniel. So I think this data CAD is interesting. However, I would like to see a break of the yesterday's high. Oh, we just did that. Good. Thank you so much. Market is listening to me. And I would like to see a pullback to the moving averages here. A pullback and a bounce at these moving averages. That seems to be the better one. There's some dollar strength apparently. Well, not even that much. There's your dollar. Hasn't continued lower so far. We got 1, 2, 3, 20 minutes not breaking this bottom. So it seems like we're getting the bounce. As I said, how much is, let me take a look where German PPI is coming in. Oh, we already had it. That's why probably we're moving up as well. We had 54.2. Volatile movements here as the news kicks in. Price seems to be heading up again. Well, in any case, Euro Pound 2. As I said, there's that potential for the Euro Pound to be in an oversold situation. Oversold. So let's see if they get the Euro dollar bounce. Indeed, it was a dramatic fall, dramatic retracement, but maybe it was just indeed still potential for upside continuation. It would be quite funny. It would look like a false breakout, but then not be a false breakout. But that's why I said there's still some time left on that 4-hour candle, so we have to wait for that 4-hour candle as well to finish that. The CAD seems to be weakening as well here, so that could maybe explain part of this dollar CAD moving up still. However, if the dollar CAD is moving up, the Euro CAD probably too. Yep, pound CAD as well. There could be things to look at, these two. If we get a retrace, what I would definitely want to see is still actually preferably a break of no, actually the close here could have been an entry. I didn't think about it that way because of the fact that price is already above the moving averages here. It still was. Probably a hook back actually to a fib. 78.6 fib. Well, anyhow, about 152.42 could still be, it's only about 70 pips lower than current price. Price could still make that hook back to about that area. With the stop loss at 152.10, could be a Euro CAD upside. Maybe with CAD weakness, apparently because dollar CAD broke yesterday's high. Euro dollar is still bouncing up. This Euro CAD, for instance, could be something to keep an eye on, I would say, during today. Probably the best combination because the Euro Pound is, although it's in a downtrend, it is looking like it has a lot of divergence. It's actually moving up. It broke out of the falling wedge. It's making higher highs here. It has the momentum to the upside. So if I had to choose between euro and pound, it looks more like euro. And if you look at, for instance, the yen is a little bit slow, although it is moving down at the moment. The CAD looks then, therefore, maybe a bit better, the euro CAD here. If I had to compare the euro dollar with the euro CAD, then the dollar is beating the CAD, which means actually euro CAD is a tad better than the euro dollar at the moment. So when doing this cross-currency analysis, euro CAD for with the trend continuation seems to be the most interesting. For reversals, I would say pound yen probably has the most potential. Yeah, the euro dollar indeed, 4-hour chart is way back indeed above its open of the 4-hour candle. It's made a big spike up, made a big spike down, now moving up again. That's always funny how it's sometimes difficult when you see a big fall like that. It's sometimes difficult to see it stop, but you can see it does stop. Sometimes, not always, right at the 138. In this case, though, I was actually anticipating some consolidation. I said, wait for the consolidation and break. That hasn't happened as yet. We just got to fly up, such a strong bounce up again. If it's a liquidity gap retracement, I wouldn't trade it as that. It could be, I just wouldn't trade it because of the fact that it's uptrend, and this could be a false breakout. That seems maybe complex, but I wouldn't count on that personally because it's too trendy still, in my opinion at least. Let's see. Richard is asking, where do I find your news report? News report. You can take a look at the news by going to Admiral Markets, click on Analytics, go to Forex Calendar. If that's what you mean, I'm not sure. So any maybe questions that some of you might have, let me know. So I have enough time to discuss any potential questions that you might have. So yes, Richard, indeed, Analytics Forex Calendar, that's where you can find it. Let me know what your questions are. Dollar yen is about to break, but because of the pound weakness, pound yen I think is seemingly more interesting. Of course, the Aussie yen has made a tremendous down move, but as with all these Aussies, they have the problem a bit of having moved already a tremendous amount. Hi there, Coco. Yes, sorry for that. We'll be back tomorrow, though. As always, same time, same place. What did we talk about? Well, we talked about that Aussie is just difficult to trade because it has already had such a big news event spike that it's not going to be easy, although there could still be some potential move left. It's way above our 3, and that's not easy to trade. So that's the Aussie side of things. We talked about the euro dollar, maybe upside breakout. It broke out, then made a tremendous drop, and it bounced up again. I would be more interested in upside. However, I would at least want to see a retracement back to 103.10 to square up this bounce. We had a bounce here. A hook back before we get upside is something that I would like to see, personally. But in general, it is a bit of a wacky environment with this big fall up, so I would be cautious on to both sides, in fact. Downside, I would not be interested in trading personally, but I would be cautious with the upside because of this pretty big spike down. But if we do get a hook back and we see a potential bounce in this level, then that could make sense. Pound dollar, I'm not interested unless it's a reversal trade. That's the only thing that could make sense to me because there's divergence. But I would rather trade then the pound yen than the pound dollar because the dollar yen is moving down and is trying to break, so then the pound yen makes more sense. And a hook back to the moving averages would be a reversal trade down to potentially L5. The best with the trend trade seems to be EuroCAD at the moment. If we get a hook back to about 152 40-ish as a bounce for more upside with a stop loss maybe below this bottom, for instance. So conclusion, Aussie difficult to trade because of the massive moves. Kiwi difficult to trade because of the interest rate. A dollar difficult to trade at the moment because of the big ups and downs, but the euro dollar could be something to keep an eye on. The Aussie difficult to trade because of the massive moves. Swissies consolidation. CAD could be interesting because it's weakening a bit, so that could be interesting to keep an eye on. Just like some yen pairs, like the pound yen as a reversal, and euro CAD as the continuation. Anything else? I think that's it. Let's see, dollar yen, Daniel's saying is, yep, it's about to push. It's right at L3, right at the trend line. We need a break of that for that downside continuation. Before I forget, don't forget to sign up for today's webinar on introduction to Heikin-Ashi candlesticks. Nanette will be presenting that. Tomorrow we'll be taking a look at live training labs again, same time, same place. Tomorrow evening we'll take a look at all you need to know about stop losses, and there's a premium webinar on the 27th, which is a Sunday, I believe. Saturday? No, Sunday with Nanette. ATR stop for a pro indicator. We reached the top of the hour, and the Euro manufacturing PMI is about as expected. Just a bit more. And euro dollar is getting follow through. Right. You're not getting that hook back. That's sometimes the disadvantage of waiting for a confirmation. It's funny, the stop loss at 137.97 was indeed technically safe, and in retrospect, a pity we didn't take a buy maybe at 138.04 for a 7 pip stop loss, but oh well. That's always 20/20 hindsight, isn't it? That's always easy to see afterwards. Because of this strong momentum, I didn't expect any more strong bounce like this, although I was bullish on the euro dollar looking at the trends. As I said, I was expecting more of a triangle formation and a break of that triangle, so I thought there was enough time to wait for the break. Unfortunately, that hasn't happened as yet. There should be more news on the pound, by the way, today. My friend Darshan is saying that Darsh is looking for you. Not sure what Darshan means, but I'm not sure what Bubs means, in fact. Bubs Darsh? Bubs Darsh is looking for you. I'm not sure what that means, but oh, okay. I was confused. I have to admit. That was a message for Bubs. Well, folks. Okay. Gotcha. That should be a viewer of today's webinar. Or her nickname. Vinka is her name, and Dasha is saying Darsh is looking for you. So I've passed on the message. Sylvia is saying, why do you think it was suspicious pound odd downward direction? Due to the shallow level of 23.6? Yes. There was divergence as well. And yeah, no problem. And divergence between these bottoms. And we had a strong daily down move here. So some retracement of that daily downside was in the cards. So we had space to the upside. In that regard, the path of least resistance was seemingly more upside-ish than downside-ish. 23.6 is a pretty shallow fib, but not often used as a continuation spot. Plus, we already had a strong weekly uptrend, so therefore a deeper move up seemed more likely indeed. Well, the odd USD was a bit different because it looked structurally different to me. It was already moving up. I don't know, it looked different structure-wise, and that I thought was explained with the fact that euro dollar and pound dollar were moving up, but yeah, the Aussie also against the dollar moving down. The moment the euro CAD hooked back, I think looks the best. Although in the long run, I'm bearish actually, or looking for a reversal, because to me, this is looking like a trend that is ending with a good reversal signal here, and this is looking like a correction, and anywhere at these fibs we could fall next week probably. So I would say there's space to the 50 fib, then to the 61.8, maybe even the 78.6, but one of these three could be the bouncing spot for a reversal to the downside, or at least a retracement to the downside to 148 or 146. I don't know. Let's see. That the CAD weakness trade has been continuing for a while, but there are the reasons to believe that there could be a reversal on the CAD, and we could see maybe some strength. For the moment, though, the intraday is up, so that's more of a later concern. GA 200 pips. Indeed, a lot of movement. Yowzers. Especially the GA, EA can have massive movements. Pound yen too, of course. Euro yen, big movers. Well, folks, without any questions, I guess we can, oh, one more question, good. Is the AO the only indicator used for conversions? No, I use others, but it's the only one I use as a standard below almost every template I have. But there are templates I use more specifically for measuring reversal potentials, but those templates have really a lot of, more of those oscillators at the bottom to compare them, and you wouldn't see much of price. So those are really only used for measuring reversal potentials and oversold and overbought levels on more like 4-hour, hourly, daily. And it's not too interesting to look at because you would hardly see price. The standard templates I use the AO. The AO itself I use for convergence and divergence both, basically. If the AO is growing on the 4-hour chart, it's good reason to find trending trades on lower time frames. However, if we get a turn and we see divergences on the lower time frames, then it's indeed getting to a point that we're probably going to have a retracement. Then it would be good to stay out. If the AO is building, it's a good reason to see it as as an additional reason to see growing momentum. And we can zoom in to a lower time frame, or use the same time frame, depending on how active we want to scale in or scale out. One of the reasons why the audio, for instance, audio is you can see this already scaling back here a bit. So it's going to be it's difficult to trade the odd because it's just a lot of momentum, but we need to retrace, and then how much, then we have the problems with the average daily range, what we can expect within the day. It makes it a bit messy to trade. Here too, the audio USD is retracing back. The AO is going to the back. There was a lot of momentum to the downside, but how much space is there? It's difficult. This audio USD upside was good, but then here we started to retrace back to the zero line, which made a retracement likely at this point. Now, of course, no one can estimate and guess that it would be such a big move down, but small retracement back down here was definitely in the cards and after maybe a potential bounce. That didn't happen because there was a news event spike. But what I mean is that we had momentum here, but then we were retracing back to the zero line. So that's a moment to be more cautious indeed. Well, folks, thanks everyone for being here. Yes, moving back to the zero line is good because then you know that retracement has been potentially completed. I can go above or below it further before we finish that retracement. For instance, here is a good example. We had an upside, momentum, price retraces, AO gets back to the zero line, and we bounce for another leg up. This, back to the zero line, after a spike up, is an example of a retracement within an impulse and trend to the upside and follow through to the upside. And you can wait for a reversal pattern indeed at here when it reaches the zero line for the reversal back up. Although it's actually with the trend continuation, right? This is down, so that's why we're looking at a reversal, although previously it was up, and that's how you can look at it as a continuation as well. Let's see. the GU? No, GA, sorry. Yeah, we're right at the 38.2 fib actually, but such a strong momentum. I'm not sure if that daily fib will be. It looks, you could see a bit of a pause here maybe, but considering the momentum up, probably the 50 fib is a decent chance now, I would say. The 50 fib, the 32 fib is right here. The 50 fib is at 182.76. Interesting. Could get there. This itself is already a pretty big resistance level, but it's shallow as well. So especially if we look at the momentum up, I wouldn't think that we would not see a follow through as yet. But one of the reasons maybe that we want to be careful with 5-minute chart buys because we are bumping into, well, 38.2 could be reason enough for it at least to be choppy and go sideways. We'll be back tomorrow again, same time, same place. And let's see, it's a bit funny start of the day, not getting any retracements on the Euro CAD, and Euro dollar still continuing. It's a shame. I did enter the long, but it's just a pity that we didn't catch a second point, and it's a pity that the deeper retracement couldn't average a better price. I'm stuck with, not stuck, but obviously the discount potential is here, but somehow continued up without any pullback. It's kind of funny price action. Well, anyhow, what can you do? EuroCAD 2, no hook back. Actually, the close above these moving averages could have been it. Didn't realize that at that point somehow. Maybe it was too distracted by the Euro downside. Well, anyhow, still maybe it hasn't made a hook back at all, so it could still happen, though it probably will for sure happen not within our session because we're going to close soon. I was hoping that we can get the dip within our viewing time together, but that doesn't seem likely anymore at all. So, but we can still keep an eye on it for a pullback. Put a fib maybe on this last swing high swing low. The 50 or 61.8 could be potential bounce spots for this Euro CAD. Watch out for the pound yen. Although it could be a bouncing spot, I would wait for confirmation because it's still early, right? If anything, it could still be in a channel like that, and although it has reversal potential, I would still want to see some confirmation that we are moving down again. Just to warn you. Well, thank you for your questions, everyone. Everyone who had any questions, Daniel, thanks so much for your active contribution. Great stuff. Always appreciate that. And we're looking forward to see everyone tomorrow, and hopefully tonight with Ned as well. Okay. Cheers.